It's February the 7th. Michael Vaughn with Brian Acker. Wow, January was terrific.
It was great. It got off to a good start, and
Especially the U.S.
up 7% in the U.S., which is almost our return actually for 2012.
That's a year's worth, yep.
A lot of people are confused at the rally, but certainly I don't think we are. I've blogged about this in terms of the fiscal cliff
Well,
that we
I remember
heard.
you were all in favor of it because it would impose some discipline on the Americans.
Well, what has happened is, okay, tax rates went up quite a bit actually. So ask Phil Mickelson or whoever is paying those high California taxes, but especially the payroll tax went up. So I think what the market is sensing here, this is the first step of quite a few steps coming up of the U.S. federal government getting control of that fiscal deficit. So,
well, the knock is Obama is sleepwalking in his second term.
I think, well, first of all, I think thank goodness that he got reelected. Only from this point of view, and you can take a very narrow point of view, but I think he's a better negotiator now than what he was when he first started. Kind of a neophyte, kind of a teacher coming in initially, but now I think he's a horse trader. And I just looked at, Fox News has its lowest ratings, in quite some time. They're firing people like Dick Morris, etc. So I think what we're seeing is actually, because he's holding firm, he has a plan. The market is actually sensing a turnaround. And don't forget, I just want to remind people that on March 1st,
the next decision point
is the sequester. Now, the sequester will cut about $85 billion worth of spending. So, over 10 years, that's $1.25 billion. But more importantly, it's another step of handling that less than $1 trillion deficit that the CBO came out and said. So, from our point of view, this is an inflection point in terms of if the federal government can get their house in order, the other side are businesses, consumers, they will start to spend more when there's more certainty over the tax rates. So there is an inflection point. The market already recognizes this. Now, there's probably going to be some stops and starts along the year, but certainly this sets up, if you will, that I've been saying for quite some time, the next bull market.
Well, a more normal market, that's what you're saying. And you have a value approach. You need that kind of market.
Absolutely. I mean, last 5 years have been riddled with, as stock price went lower, there was more risk because that company, potentially could have gone out of business. If we did basically have a deflationary environment, a lot of money went to consumer staples stocks like P&G and Coke, because basically there was earning certainty, even though they're not value names.
Right.
So now basically what we'll see is, hopefully there's no deflation. The Fed is basically there buying up everything to make sure that doesn't happen. And if the federal government can withdraw basically their deficit in, and they don't even have to balance the budget, just get it down to about $300 billion or so. So it gets that on a stable footing, then I think investment dollars will seek out value, basically because that's where the opportunity is in terms of valuation, not fearful that we're going to have deflationary.
Well, are we in this normal market, or do you just sense it? I mean, do you still have the orange light, or have you gone green?
We're still yellow. The traffic yellow is there. Once we have a positive transit of EBV +3, which I write about in my blog, then I think basically everything is green. The market is loving it, what it sees so far. But again, I suggest it's going to be bumpy. We'll see the sequester. The Republicans are licking their wounds. Certainly we'll get the debt ceiling again, maybe in another 4 or 5 months. So still a lot of play here. So, and again, we've had a nice run. Some nice consolidation here would be nice. Yeah, so, but
Is there
it's
more
better.
opportunity in the U.S. than in Canada?
Absolutely.
Now?
These large cap stocks, I mean, they're yielding more than 10-year treasuries. And valuation-wise, they have never been cheaper. Keep in mind, this is now 12 years where these things have gone sideways to down. So, you know, 85%, all the pieces of the puzzle are in place. We need another about 10 to 15%. But certainly I think the market is smelling here that things are going in the right direction.
Well, as I get closer to that blue line, I'm feeling better. Brian, it was a great month. Good to see you in February. I'll be in March.
Good to see you again, Michael.